Now it's my favorite time.
And mine.
And yours. Hopefully yours as well. It's quiz time.
Quiz time.
So let's see how you did from last week's questions.
Oh, these were easy.
Are you
Everybody
ready?
did well on these. These are easy.
They're all above average.
Yeah, that's right. I'm sure you did above average. Yeah.
First question is, what happens if you borrow money to fund your current lifestyle?
Your lifestyle will likely be less in the future. So remember, when you're borrowing, you're going to be working in the future to pay that back and not being able to spend it. So
The stored work.
stored work. Money is stored work. And if you sell it now or you borrow it now and spend it, in the future you're going to work and not, be able to spend it.
Okay, next question is, why are markets forward-looking?
Because you can't buy the rearview mirror. That's, in fact, most of the point of this show, is to explain to people that what I would really like to have happen is to buy stocks in last September. That would be great. So they look at the chart.
Oh, I'd like that.
Yeah, I know you would. Everyone would. So they look at the chart from September up until now. The stock market's been going up. And it's like, oh, God, this is great. This is what I need. Well, you can't buy that. You needed to buy that back in September. How did it look in September, by the way?
It was
Pretty dismal. Pretty dismal. It was on a downturn. It didn't look very good at all. So, the idea that markets are forward-looking because you can't buy yesterday, and the pros know this, and the amateurs maybe not so much.
Okay, next question is, what is the difference between a goal and a dream?
Ah, I love dreams. I love a denial aisle. Do you ever go on vacation in denial aisle? I like that.
I've done that many a time.
Yeah. So a goal has a time and a money associated to it, a time and a cost, and a dream is vague kind of wishful thinking. So a goal is I want to have $1 million in the next 20 years, and a dream is I want to be rich someday. One I can help you plan for. The other one is, a dream.
Put down the numbers.
Numbers you can plan for.
Okay, and last one is, what's a hedge fund and would you invest in one?
Hedge fund is basically a private investment entity that is for qualified investors, qualified being basically wealthy. You need to have $1 million or a couple $100,000 in income the last couple of years. Would you invest in one? Maybe, depends on who you are. But of course, the overall rule in investing in anything is you need to understand it. A lot of hedge funds are black boxes that don't tell you what they're doing, and they have a lot of leverage and risk.
I do great over here.
Yeah, I do great.
You can't see how I've done it, but
trust me, I do great.
Trust me money.
That's how Bernie Madoff got billions and billions of dollars and was completely faking everything. Okay, ready for this week?
Yes.
Okay, so this week, what's the difference in UK and US fiscal policy right now? Should be pretty simple. What are the actions of Congress? Why are the actions of Congress important to the markets? Where are you overconfident, and where should you have more confidence? The flip side of being overconfident is you don't have any confidence in anything, or not in anything, but in certain things where you should have confidence. And so a lot of times, especially when I'm talking to students, it's like, have a little more confidence. You're going to be able to do this. It's like, oh, it's so hard. I can't do this. I go, it's only hard until you learn how to do it. So, get up there. You can do this. And it's surprising how many people don't have any confidence at all. And the last question, which you'll have to stay tuned for, is Facebook really worth $50 billion?
I'm not sure about that one.
I don't know.
Looking forward to that segment.
Got to stay tuned to that.